Hi, Amy.
Hey.
Hey, Amy, have you heard about the November 3rd announcement the Fed did?
Oh, sure, on quantitative easing.
So what is quantitative easing?
It's an example of the Fed's non-conventional monetary policy.
So what is non-conventional monetary policy? Speak English.
I'm sorry. The non-conventional monetary policies are things that the Fed has done in reaction to the financial crisis. They're different from the conventional monetary policies that the Fed will normally do. Normally, the Fed could adjust the reserve rate, the discount rate. They could buy or sell securities to impact the money supply. Or one other thing that they've done is adjusting the federal funds rate. Now, at the beginning of the crisis, in August of 2008, the federal funds rate was 5.25%. What would you suppose it is now?
I think like it's just decreased by 1 or 2%.
It, in reality, is about somewhere between 0 and 0.25.
Are you serious?
Yep. They've adjusted it so many times to try to encourage people to invest
So
that
the economy
it's 0.
Oh, okay.
Now there's nothing, they can't adjust that anymore. So they have to come up with new tricks. And these are non-conventional monetary policies. Quantitative easing is a part of that. What the Fed does is they create money and then they give it to the banks. Their hope is that the banks will take these excess reserves and loan them out. And then people will invest with them. They will spend that money. Their hope is not that the money gets produced and then saved. They want it spent so it goes in the economy to help it grow.
So Amy, I've heard about the toxic assets about the banks. So can you explain it? I didn't get it.
Sure.
Okay.
The banks, from the housing bubble, they've got all these mortgages and mortgage-backed securities and all these things that all of a sudden aren't worth nearly as much as they thought it would be. So these are a burden on the bank's balance sheets. They need to get rid of them. And so what the Fed does is it buys them and it takes them off their hands, and that frees up the banks to be able to loan out money.
Oh, so basically you mean to say that the toxic assets are a burden to the bank, then because of the toxic assets, the bank can in long run go into bankruptcy.
Absolutely.
So,
yes.
Amy, I've heard about the inflation also. So what is inflation?
Inflation is a rise in the general level of prices, and critics of quantitative easing are afraid that with all this money creation of the Fed, that inflation will ensue, that prices will all of a sudden go way higher. That'd be a good example. Yeah.
Oh, so you mean to say, like, if we like the cigarette which you used to cost $2 will now cost $5 after inflation?
Absolutely.
So after inflation, then you mean to say the rates of the dollar are going down?
Yes, the value of the dollar is decreasing.
So the value of the dollars are decreasing. So when the value of the dollars decreases, the export will be competitive. You mean to say?
Yep.
There will be more exports, right?
Yeah, American exports will now be more competitive as the dollar has decreased in value. And this is another way that helps the economy grow, is now the exports are bringing in more. Yeah.
So, Amy, about the announcement, so what is it like related to this about the announcement?
What the Fed made this announcement largely so that the economy will start to grow. They made this announcement in the hopes that consumers will see it and know that, okay, the banks are okay now, that the Fed has the banks, they're going to support the banks, and they feel free to invest and most importantly to spend.
To spend, oh, so you basically mean that the Feds are going to give a large chunk of money to the banks so that they can loan it out, and so the people can spend those money, and there will be a boost in the economy.
Absolutely.
So now I get it.
Good.